Hey, good afternoon, E-mini minders. This is Trader Tim from eminimind.com, and I'm doing a trade recap for the week. Today is Thursday, the 16th of January, 2020. And before I get into the ES trades from yesterday and today, market's not quite closed yet. We got about an hour and a half to go, but I'm done for the day. So I thought I'd knock out the video here and now. The only swing trade I've still got on, or the only one for the year that I've put on, is the Microsoft one, and that's the long from above about 159.20. And when I do my scans for stocks that are making 52-week highs and 52-week lows, when the market's making new highs, a lot of times I'll skip doing a scan for new highs because there's a lot of stocks that might be being lifted by the market. So the ones that have been on my watch list from back here that are still making 52-week highs, but the market is not necessarily making 52-week highs at that time, those have more impact when the market changes trend. So I've got a list of longs and shorts. At this point, as the market goes up, I start to hone in on the shorts, looking to put on, maybe a short or two here in the next, either tomorrow or perhaps early next week. And then on the pullback, then I'll look to add maybe two or three new longs next week. You don't want to load the boat all at once by putting on five new positions at once, or you have to have a threshold, because if you put on 10 positions on the same day, now that's 10 times your individual trade risk. So if you're going to risk, let's just say $100 per trade, well, if you put 10 positions on at once, now you have $1,000 of risk, 10 times that initial risk per trade. So it's helpful to stagger them, and to get the best entries, I'm shorting the weak stocks on bounces when the broader market is having an up day, and then I'm buying on pullbacks those strong stocks. So Microsoft I put on here above the high of the low bar, when at the time market was just kind of moving sideways. It wasn't in this screaming uptrend, if you will. So as we continue higher, the longs aren't as appealing quite yet. So that's the only one that I was able to get in so far this year. But as we kind of get a little bit more undulation in the market, when it stops just going straight up, then I'll be able to add some shorts and then more longs as the month goes on. So that's the Microsoft trade. In terms of the S&P, it's I wouldn't necessarily call it parabolic. Like, we're not going straight up. If I draw from the last couple of months, our trend line is pretty much a 45-degree angle. And that's, for the most part healthy. There's some sideways consolidation that is holding with the trend line, and those sideways consolidations are good because when the market falls back down, if it does drop, below this trend line a little bit, it should catch on, the area like back here at the end of 2019. If we dip below, you know, the trend line's not a hard line. I just try to use it as a general guide. If you want to throw a 50 period moving average or something like that, it's not going to hurt. Um, it's just important to know that moving averages and those types of tools are really best served in trending markets. So as we shift gears and go to day trades for the week, I don't have a whole lot to report on. On Wednesday, yesterday, I had two retracement trades, and I'll get back to those here. First one was at 20 minutes in. And now remember, yesterday we opened kind of the middle of the range. The trend has been to make a new high pretty much every single day. If it's not a gap up to new highs like we had today or back here on the 10th, it's making a new high, not necessarily right after the open, but maybe mid-morning. So, as we started the day yesterday, we were in this pretty strong uptrend in the first 15 minutes, and I drew up a retracement like so. That one traded to its negative 23% target, so I drew the next retracement, and this is all still within the first 15 minutes. So at this point, I'm just drawing the setups to kind of get a read on, are they holding? Are they messy? Are they clean? The next one was a little bit messy, but we did hold a hard line on this triple bottom just below the 61.8. And then the long that I took was essentially the next one from that swing low up to highs, and just used a 32.91. And my thought process there was, okay, we're close to new highs. We were like right about here. 32.91, yeah, right about here. So we were about to make new highs again, new all-time highs, and we were breaking out on the day. So the thought is, okay, if I can get in a little bit ahead of it, then maybe I can catch the move up. And Tuesday, I tried to do that, and I just didn't get a fill on one of those long trades. So I wanted to make sure that I got it on Wednesday if I could. So took the 32.91 and then just started trailing the 61.8. So I drew up the next 61.8 like this, trailed my stop, and then ended up getting taken out up here by using this swing low to the swing high and trailing the 61.8 here. I didn't want to get super aggressive because I figured, well, if it ends up being a trend day and it just rips the rest of the afternoon, it'd be nice to stay in and not have to try and re-enter because I got kicked out. And so was a decent move. The distance from the high at 97 to where my stop was at 94s was only 3 points. So that wasn't too far away. If it was 6 points, now I got to start looking at, okay, I can't leave my stop 6 points away from where price is at its peak, so to speak. And then the next trade that I had was actually a short because we peaked above highs. We put in a new all-time high, and then we ended up only going about 2 points higher than the prior day's high, and then we sold off. And so I thought, well, if one of these days we're going to get a deeper sell-off, and we've seen these kind of sell-offs where we gap up and then slide. So I was thinking, well, let me draw up the full halfway back here, low to high, and we're still a ways to go before we came to the full halfway back long. So that means that it's okay to take a short because we weren't running into support. So I drew up the short like this. I tried to get in here, but it didn't fill. So I moved my anchor point down. So when I go from highs to lows like this, if I don't get a fill here, I don't want to just go from this swing high down to lows. I want to use that same high to the new low point like this. So I traded super clean at a 94. And remember, that's where I ended up getting out of the last trade at 94s. And a lot of times, if I'm going in the other direction, you do tend to see the prices be pretty close. Like, I get out of the 94 long and I enter a little bit later on the 94 short. So I took the 94. It got so close to a first target. I think it was 1 or 2 ticks away, and then it shot up. So that ended up being a stop out, but we broke the swing low here. Didn't have a high tick at highs, but it was certainly a valid short off of highs. So those are the only two from yesterday. Today I didn't have any retracement trades. Market's been a whole mess of barbed wire this morning. And if I go to the morning's tick chart, you can see not a lot to work with. For the reason that the range has been very small. So when I first see a small range, for the 30-minute candle, the very first 30-minute candle, in this case today, it was 5.75 points. I'm thinking, okay, that's a pretty small candle. It should be easy to break outside of that candle, to move above or below it. I mean, 6 points, that's a pretty small range. So when we don't break outside of it, like immediately at 30 minutes in, and then the new candle forms here, if we don't break the first candle right away, I'm immediately thinking, okay, this whole middle area is going to be a no trade zone, because anything within the first 30 minutes, the range is so small, it's too hard to, if I draw up a halfway back, well, by the time it comes halfway back, we're only 2 points from lows. And then same thing if I drew up a halfway back in the other direction. By the time it rallies, oh, we're only 2 points from highs. So there's just not enough room to trade retracements, range bound like that. However, on the 5-minute chart, I wanted to run through the setups because you can get away with a little bit smaller range sometimes when you're trading the 5-minute chart. But when the range is bigger, if I could just like extend or take this chart here and just make it wider. So instead of 6 points, now it's 10 points, 20 points, 30 points wide. This principle that I'm going to talk about here is super applicable. So essentially what I'm looking to do is short below the low of this high bar right here. Short it, write it down, take, a 2 point or a 1.5 target, and then when the market reverses, to look for a long. And in this case, the next candle needs to trigger it. So like this inverted hammer here gets triggered on the next candle. It breaks the low. Well, then this candle on the long side, its next candle does not break a high. So there's not really anything to do at that point. You come back up here. Okay, here you can short below the low of the high bar, write it down for a little ways. And then this next candle here, you can get long above its high bar, ride it up for a little ways. And again, today's range is pretty small, but on a bigger range bound day, that's a great way to be able to capitalize on these very short-term trends. Like if I just came in here with a pen and just drew, okay, here's a 3-candle uptrend, here's a 3-candle downtrend, a little bit of sideways action, nothing really to do there. Here's a 3-candle downtrend, 4-candle uptrend. So that's how I use the 5-minute to kind of use some of the momentum. The 5 minutes a bigger time frame, so you're not going to have as much noise, so you can filter out some of the chop that you see if you were just looking at the 512. So they're kind of two separate methods. So you don't necessarily want to be combining them. Like I'm not drawing up retracements and then looking for other things to cross and line up, but it's just kind of a way, okay, if retracements are going to be sloppy, maybe we'll see something on the 5-minute chart that can be actionable. So that was the last 2 days. Not much happening Monday, Tuesday, and we'll see what tomorrow brings. But it's starting to feel like, one of these days we're going to get a bigger slide. Even these pullbacks here have made for some decent trading opportunities. So if we do get the pullback, I'll be watching for my long watch list. This evening I'll go through my short watch list, see if anything bounced or was lifted by the market rallying, and see if I can get in any shorts in the next couple days. And then if the market pulls back, look to add a couple of longs. In intraday wise, every day has made a higher low here this week as well as a higher high. So that's the pattern. If it changes, I'll make a note of that and then like watch for some kind of different result. Otherwise, the pattern has been just put in a new high every single day. Not a huge new high, just going, a couple of points higher every single day. When you get these solo candles up here that have gapped up, those can start to be signs of an exhaustive move. Or if you get like 3 big body, strong trend days in a row, that can be a sign of like a last ditch exhaustive move. So Tesla got a little bit of a pullback today. Um, not a huge pullback, but you can see how like the Tesla chart is much more straight up. Here's kind of the 45-degree angle. Here's the next steeper angle. And then, for a while, it was kind of doing like this, almost straight up and down. So when I start to see the market going like this, for kind of like first trend line at a 45, secondary, third, almost straight up, I'm kind of looking for the market to make a deeper pullback. Now, that doesn't mean I'm just coming up here and shorting just because it's going up, but I'm thinking kind of 2 steps ahead. Okay, what could transpire? If the market pulls back, it doesn't necessarily mean that it's super bearish. It just might mean that there's a good buying opportunity, but I don't want to just buy it up here at, 546. You better wait till it comes down to 446. So that was my week so far. If you have questions, feel free to leave them in the comments below, and I can chime in. I hope everyone has a great Friday and a great weekend. Thanks. Talk to you soon.